Hey, what's up guys? Welcome back to another video, and today I'm going to be going over order blocks. Okay, so there are a lot of misconceptions about order blocks. One of the misconceptions being that every single order block you see in the market is a valid order block. So that's actually not true at all in any way. In order for you to get a valid order block, you have to implement other strategies like market structure, price action, breaker structure. That's just the fact. That's the truth. You cannot use order blocks alone to trade in the market. You have to implement order blocks along with other strategies. So in this video, I'm not just going to talk about order blocks. I'm going to be going over other concepts like price action, market structure analysis, but I promise to make this video as short as possible. I do not intend to make this video like a one-hour course or something like that. Because with all that being said, let's get into the video. Okay, so this is GBP/USD. We're currently on the 1-week chart. Okay, so in order for us to find profit order blocks, we have to first of all, read what the market is saying. We have to go through price action and understand the current market structure of GBP/USD. Now, what can we see on the chart? So you can see price from the market structure level as they coming all the way down, right? Then price went all the way up, then price came down, then price went up, then price went all the way down. Now, currently price is on a bullish momentum, right? So this is the market structure of GBP/USD on the weekly time frame. So what can we learn from this price action? So we can see right here that this is an equal high. And in the market, whenever you see an equal high, there's a high likelihood that price will go over to tap out those highs because this is basically a liquidity. Okay. So as you can see, price has come all the way down. Price came all the way down. This was a big bearish momentum. And now currently price is on a bullish momentum. So if you want to get into a trade, if you want to find a trade setup, you have to enter on the buy. You have to have a bullish perspective. So basically, you're not looking for a sell. You're not looking to sell in the market. You're looking for a buy because price will go all the way up to tap out these equal highs, right? So when you want to get into a trade, you don't just picture every single order blocks as a valid order block, right? So you can see a lot of order blocks right here. But the thing about order blocks is that it works in hand with other concepts. So just looking at the structure right here. So you can see price, as price came all the way down. So there was sudden impulse upward. And now you have to look for a breaking market structure. Okay. You have to look for a bullish breaking market structure. So you need to highlight every single highs in the section right here. So as you can see, this right here was the first high broken by price action, right? This was the second high. This was the third high, and this was the fourth high broken by price action. Okay, so immediately price, broke this structure. This order block right here, this bullish order block automatically became a valid order block. So you expect price, immediately price goes all the way up, you expect price to come all the way back into this order block because this order block broke structure, right? But as you can see from the chart, price didn't actually come all the way down because price went all the way up, right? Came down, went up, came down, and currently is on the bullish momentum. Now let's take a look at another breaking market structure because as you can see from the price action, this order block actually broke a lot of highs. It broke this high, it broke this high, and it broke this high as well. So making 3 different highs. So this is a very, very, very solid order block. But when you take a look at price action, for every break in market structure, there is always a valid order block. So as you can see, price came all the way down, but didn't come into this order block right here. And price continued the bullish momentum. And price did another break in market structure. So making this a valid order block. So your next point of interest is going to be this order block right here. So you still have this order block in mind, right? You see, oh, maybe price is going to come all the way down, but this is going to be your next point of interest. So you're going to anticipate for price, to come all the way down to continue the bullish momentum, right? So that's how it actually works. So in order for you to confirm that order block is valid in the market, it has to break structure. It's basically simple. Now let's take a look at what price you're going to do next. Let's see if price is going to come into this order block right here. Okay. Right. So as you can see, price didn't actually come into the order block. So price created another order block right here. This is another order block. But if I ask you a question, is this order block valid or not? What are you going to say? Now, a lot of people might say this is a very valid order block because as you can see, this is actually a swing low. So price came all the way down and went all the way up. But this is actually an invalid order block. Now, why is it an invalid order block? Because it did not break any structure on the far left side. So as you can see, this order block is valid because it broke structure, right? That's what make it valid. This as well was valid because it broke structure. But this order block wire isn't valid because it did not break any structure. So if you're going to enter into this trade, you do not use this order block wire. So you know price, if price will come all the way down, because the way price works is that, price doesn't go on a straight line, right? Price doesn't go on a straight line. Price has to, expand, retrace, expand, retrace, expand. So these are price actually works, right? There's this. Okay. So back to our chart. As you can see, this order block is an invalid order block. So if price will retrace down, there's a high probability that price will go below this order block wire. Now let's see what happens in the market. Okay. And again, we have another order block wire. We have another order block wire. So again, some might say, now this is a very valid order block. But this isn't actually valid order block, because if you take a look at the far left side, you're going to see that this didn't actually break any single structure. So this order block is invalid. This as well is invalid. So they're both invalid order block. So if price is going to retrace all the way down, I know that price will stop out this order block, will stop out this as well, in order to come to test this. Now let's see what happened in the market. Okay, as you can see, price broke this order block, right? So this essentially is an invalid order block. Like I said, price has broken this order block. So let's see what's going to happen next in the market. Okay, price broke this again. So basically, those order blocks are all liquidity, and bam, as you can see, price has tapped into the real order block. So basically, all you just need to do is to set your position right here. So this is going to be your entry, right? And this will be your stop loss. Now, if you want to sell or take profit, all you need to do is you just look at the market from a bigger perspective, right? As you can see, price is becoming all the way down. Now, price is currently on a bullish momentum. And now you see this order block is a valid order block because it broke structure. So if you're going to sell your TP, it should be right here, because price will definitely go all the way up to tap out these equal highs, because this is basically liquidity. The banks, the institutions, the hedge funds, Wall Street, they're all going to push price up just to tap out these highs in order to stop those who sold at this position. So it's very simple. So you're going to set your TP just right here. But this is actually a weekly time frame, right? It could take months, even years for price to reach all the way to this TP right here. So what are you going to do? It's very simple. You just need to refine down to the lower time frame. In order to get more risk to reward ratio and more better setups, you just have to go down to the lower time frame. Now you already have your bias, right? So price has started into this other block right here. So price will definitely go all the way up. So we have our bias. So the next thing to do now is to refine down to the lower time frame in order to look for a structure we can use for our trade setup. Now let's go down to the 1 day time frame. Okay, so this is the daily time frame. As you can see, all this right here is our other block on the 1 week time frame, right? So on the daily time frame, you can simply use this range right here to get into the market, right? So this is going to be your range. So all you just have to do is look for a break in market structure. So every single time, the first thing you have to do is to highlight the first few highs. Now this is the first high. This is the lower high. This as well is a lower high. And this is a lower high. As you can see, this as well is a lower high. This is a lower high. Just highlight every single high so you have a better perspective, right? So as you can see, we have 1, 2, 3, 4, 5, 6 different highs. So every single time price breaks a structure, right, you have your order block. Now let's see how the market is going to play out. Okay. Now we have our breaking market structure. Now this is a breaking market structure. So as you can see, this right here becomes a valid order block. So if price will retrace all the way down, price will come all the way down to the order block before it starts to go all the way bullish. Now let's see what's going to happen next. Okay. Price comes all the way down. Okay. And price has tapped into our order block. So this is just very basic. This is how you analyze the market. You don't just go using any order block you see in the market. You have to patiently wait for a setup to occur. You have to implement breaking market structure. You have to implement price action. You have to look at the market structure as well on the bigger perspective. Now let's just set our position right here. Okay, this is going to be our entry, and this will be our stop loss. So on a weekly time frame, I think we had about 1 to 5 risk to reward ratio. Now let's see what we actually have on the daily time frame. Now if I take my TP up onto this right here, you can see this is actually 1 to 14 risk to reward ratio, just using this high right here. Now if you want to go on a long term, on the weekly perspective, this is actually going to be a 1 to 30 risk to reward ratio. That's actually crazy, but we shouldn't get ahead of ourselves. Let's just use this right here because this is the daily time frame. So this is just enough. This 1 to 14 risk to reward ratio is just enough. So all I have to do is just wait patiently for my setup to play out. So as you can see, this is a breaking market structure. Now if I leave this right here, so you can see price again tapped into order block, and price started going all the way up. Okay, price is going all the way up, and price is going to eat that TP. Let me just take this right here. So I think there was a brief consolidation, right? All this right here is actually a consolidation, but it doesn't matter. All that matters is that price will definitely eat RTP. So let's see what happens in the market. Okay, so price is now on a bullish momentum. Price is not going bullish. And as you can see, price just eat RTP. Price just eat RTP. Now this is a 1 to 14 risk to reward ratio. So this is very massive and very crazy as well. But the thing about order blocks is that you don't just, rely on one single setup. You have to enter into every opportunities, right? You don't just enter into this one order block, just wait for price, to reach your TP. You can literally enter into multiple positions, right? There's nothing bad if you enter at least 2 to 3 setups just on this single momentum. Now let's go back in time to analyze if we can find any other order blocks as well. So let's just erase all this right here. Okay, so this is our first order block. Now, where is our second lower high? This is our second lower high. So we have to patiently wait for price to tap out this high before we look for our next trade setup. Okay, now let's see what price is gonna do. All right, okay. So this is a breaking market structure. This is a new breaking market structure. As you can see, price broke this high right here. So if you're going to enter this trade, which order block are you going to use? First off, which order block was responsible for breaking this high? It was this order block. Okay, so obviously, as you know, we have two different types of order blocks. We have the bearish order block, we have the bullish order block. Now, this black candle right here is a bullish order block. Now, a lot of people might enter, using this order block right here because this was responsible for creating the swing low. But what I mostly do is to just use the bullish order block all the same. So I just use the whole body plus the wicks because I don't have the energy, to lose trades. Some might refine it down, try to use like 50% of the candle, but I prefer using every single body of the candle plus the wicks. Now let's see what price is going to do next. Okay. Now as you can see, price has tapped into our order block. Now this is going to be our second trade setup. So on our first trade setup, we add about 1 to 14 risk to reward ratio. Now let's see what this is going to give us. Let's say our entry right here. And move our stop loss. Okay. Let's try to take it up onto this TP right here. And this is actually 1 to 8 risk to reward ratio. So basically now altogether we add about 1 to 3 to risk to reward ratio, just entering using multiple setups. Now this is just all you have to do, right? This is just all you have to do. It doesn't get easier than this. All you need to do is just wait for the next breaking market structure, use the order block responsible for breaking that structure, and just patiently wait until price gets to your TP. It's that simple. Now let's see if we're gonna get a third setup. Okay. So as you can see, this is a breaking market structure. Now price has broken this high right here. Now which low was responsible for breaking this lower high right here? This right here was responsible, right? As you can see, so this order block is a valid order block, right? This order block right here is a valid order block. So as you can see, price has tapped into it. Okay, let's see what's going to happen next. As you can see, price is on a bullish momentum, right? Price is on a bullish momentum. Okay. Now there's something I should add, right? So whenever you enter into a trade and price comes all the way down, taps into your order block and starts to go all the way up, I do advise you use a trailing stop. So what is a trailing stop? So basically the way trailing stops works is very simple. Now when price comes into your entry zone and when price starts to go in your direction, so you're just going to modify your stop loss upward, right? So when price tap into your order block and price has broken the external liquidity. Now this is the external liquidity. This right here is the external liquidity for this order block, that is, and this is the external liquidity for this order block. So when price goes above the external liquidity, I always advise you set a trailing stop because you never know, right? Price could come back into your order block and tap you out. Okay, now let's see how price goes. Okay, so as you can see, price is currently in a consolidation. Now this is just basically liquidity. Now this is just liquidity. So I'll be explain what is happening right here. So it's very simple. Now the way banks manipulate the market is that there's this thing retail traders call support and resistance. Now support and resistance is when price, is just going all the way up, coming down, going all the way up, but just stays in the same position. Right. Now this is the support level. Okay. And this is the resistance level. So what retail traders are taught is that whenever price reaches the same place all over again, that level is actually a strong level. So some people, who are looking for a buy, they enter into this level thinking price will test this level because they are told is a strong level. That price will go all the way up. And for those who are trying to sell, they believe this resistance level right here is a strong level. So they believe if price goes all the way up, price will retest this strong level before price start coming all the way down. But what they don't actually know is that they are creating liquidity for the banks. Now the banks have more funds than you and I, right? So they're able to manipulate the price. This basically means that they're able to push price wherever they want. If they want price to go all the way down, they can just pump money into the market and price will start to go down. Same thing for bullish momentum. So what most retailers don't realize is that at the end of the day, price most times tap out every single sellers on the resistance level and comes all the way down to tap out every single buyers or so on the support level. If price is on a bullish momentum, continues the bullish momentum, or if price is on a bearish momentum, continues the bearish momentum. So that's how basically liquidity works. Now let me delete this real quick. Okay, let's go back to our charts. So what do we see right here? So let's first make a pattern, right? So price has been coming all the way up, right? And there was this consolidation right here. So as you can see, price came all the way down, went up, came down, went up. So there's this consolidation. So this gives you the signal that price is about to manipulate. This is all manipulation. So most retail traders don't actually know that this is manipulation. So many of them will think price will keep going all the way bullish. They enter at the support level. Why those who think price is about to go on the sell, they enter at the resistance level. But what price end up doing at the end of the day is that price will tap every single person out. First, price will tap out the buyers. So when you see this in the market, it's best you don't take any single trade at all. So in order to understand what's actually going to happen, you have to go on to the higher time frame to have a bigger perspective, right? You don't just rely on one single time frame. Right now, let's go on to the weekly time frame. Now on the weekly time frame, this is a section of manipulation. So just on price action alone, just on price action, so price is definitely going to tap everybody out on the buy, on the support level, and later on tap out every single sellers on the resistance levels. So what you just have to do is you just wait on the sideline for price to do its thing. So likely price will retest this order block right here, because price, in order for price to go bullish, price had to tap into another block. So even though this other block didn't break any structure, this other block is actually a valid other block, because in order for price to keep going bullish, price has to tap into a other block. Now this is the nearest other block to the liquidity, so price is definitely going to come all the way down to this other block in order to keep going in the bullish momentum. Now let's see what price is going to do. Okay, okay, and as you can see, price has come down into the other block. So now you know that price has done its thing. But actually though, price did end up tapping out the resistance level first before coming all the way down to tap out the support level. But it doesn't matter. All what matters is that price has done its thing. Price has come all the way down into this other block. Now all you have to do is to just refine down into lower time frame, find any possible break of structure on this range and try to enter a buy. It's very simple. Now let's see what price is going to do at the end of the day, right? So price is going bullish. And as you can see, price has finally tapped the TP. So it's that simple. It's that simple. So as you can see, Orderblocks is not independent. Orderblocks relies on other concepts like price action, market structure analysis, and things like that. You don't just go into the market, boom, entering into every single Orderblocks you see. You're gonna lose a lot. That's the truth about it. So you have to implement Orderblocks with other kinds of concepts as well. That's just the truth. Now this is gonna be the end of the video. I really hope you did find this video helpful. Now if you want more content like this, you gotta subscribe to the channel and make sure to turn on notification so you can always be notified every single time I upload another video. Thanks for watching this video and see you in the next one.